And of course, the report also says that the current economy is still fragile. In terms of GDP forecasts, Fitch Ratings is looking at 1.5% GDP for Nigeria in 2017. We're waiting, as you have heard, on Tuesday. The Bureau of Statistics will release the second quarter GDP. That some folks have already said will be positive reading. But how we make up for that, by what numbers, we're going to hear that on Tuesday. Then we have 2 more quarters to see if the forecast from Fitch will come through for 1.5%. Then 2.6% is the forecast from Fitch Ratings for 2018 growth. This, according to the report released on Thursday, will be driven mainly by increased foreign exchange availability to, 1, the non-oil economy, and of course the fiscal stimulus. So if we have an increase of FX availability pumped into the non-oil economy, then, and of course a fiscal stimulus on the other side. So this looks like a bit for on the monetary side and on the fiscal side. Then we're looking at a GDP growth, 1.5% this year and 2.6% in the next. In terms of current account deficit, the report says we're likely going to grow our surplus up to 1% of the GDP. The country's GDP is around $400 billion US by the last estimates. The last time with the current account we're less than 1%, 0.6%, so we could see a bit of that widening according to Fitch Ratings to 1%. That is one good news. In terms of the exports, the report stated that exports were seen growing higher at about 30% in 2017. Of course, we know the bulk of that will be from the oil exportation. Then additional 10% to the 30% in 2018. So if you add the simple math, we're looking at 40% from this forecast. And then look at the imports will also rise on dollar availability and the recovery of the non-oil economy. So as you see a recovery in the non-oil economy, then you can see imports also rising. Meantime, speaking specifically to the FX market, this report, economic report on the state of Nigeria's economy, says that the I&E window, which is the investors and exporters FX window, should be considered, according to that report, quote, the relevant exchange rate, although the exchange rate market, according to Fitch Ratings, is far from fully transparent. So, of course, as usual, the advice on how to rejig the FX markets to make it more transparent and more liquid, and all that's contained in that report. You can check that out. Finally, the report said that there's no material development within, with likelihood leading to an upgrade of latest negative outlook. And what that means in very simple term is that there is no material event or developments in the near future for which the Fitch Ratings would reveal the negative outlook on the Nigerian economy happening. So there's no likelihood of that. So meantime, so we're going to keep the negative outlook, but also keep our IDR at B+. That's far as that economy is concerned. But of course, let's show you what September is going to look like. First, of course, you know, the GDP numbers, we'll talk about that. Tuesday will be very big on that. Inflation will be coming through in the second week of September. Yes. Then the MPC meeting will digest both the GDP numbers, the inflation figure, and then those members of the committee will hold their meeting and give us direction of where the interest rate and other key parameters will go between September and the final meeting expected before the end of the year. This is second to the last meeting for 2017. Then we have the monthly debt management office bond auction. You can take a look at the calendar. You can see the amount that the debt office will be releasing in the third week of this month. Then you have the raft of rights issues be put out there by listed companies. Of course, we'll show you some of the big names later on, those who are raising billions in the market. That has been since the middle of the year, June to be precise. But one big story you need to focus on in this month will be the annual general meeting of the Nigerian Stock Exchange. There will be an election of new dealing firms and individuals that will come on board of the Council of the Exchange as new members. But also very key at this meeting taking place in the next few days is the demutualization, the progress report on the demutualization of the stock exchange that has passed through the readings above the upper and lower houses at the legislature. And then we had a public hearing. Then, of course, the stock exchange, most likely as a mutual exchange, perhaps this will be its last annual general meeting before it becomes a company limited by shares. And finally, on the economic front, we're looking forward to details from Cabinet folks in terms of the ERGP, that's the Economic Recovery and Growth Plan implementation. The budget 2017 is still out there, and of course the preparations for the budget 2018. And of course, we'll be happy to welcome the members of the National Assembly back to the chambers. Okay, so look at the market very quickly. Quite a number of headlines in the year since we started. Big stories around the merger between Lafarge Africa, concluding its merger with a few other cement companies. Ashaka Cement listed on the exchange for about a number of years, of course now being delisted. So Lafarge Africa now holds about 85% of that company, and that makes its tradable free float on the NSE to get a little bit close to the regulation, 20%, at 15.03%. NIPCO, of course, you've heard that we also had that as one of the good news, concluding its majority takeover of Mobil Oil Nigeria, now renamed One PLC, and going by that name in the trading engine and on the trading board, on the counters at the stock exchange. Then, of course, one other big news is Skybank. We're still waiting for this lender's full year 2016 earnings. They're still pending with the central bank. But the lender says it has appointed advisors for a fresh capital raising, billions of naira also being clawed back from delinquent loan book. Let's go back after the break. Ibeka Chukwu is the junior oil minister, and he's been given an assessment of what he has done in the last 2 years since the day he was appointed the group managing director at the NNPC. We'll listen to him.